Let's talk about the markets in 3 minutes. Let me start there. Let me start on the Fed. How convinced are you about a pause at the Fed, about no interest rate hike at the Fed? That's what Goldman Sachs is talking about. Even if the market has gone from 50 to 22, Goldman saying no hike. What is your latest thinking when it comes to the Fed?
I think Goldman is likely wrong on this one. I think that the Fed will go ahead with 25 basis points. I do not think it makes sense to pause rate hikes. I think they'd lose a lot of credibility and face. Let me explain why. Going into last night, the big issue was what would happen to depositors. Now, everyone thought they'd be bailed out, but it was when. Not only have they been bailed out 100%, but they have access to all that money on Monday. So that was well above expectations. On top of that, we provide this emergency bank lending program that has guaranteed depositors everywhere else. So suddenly, the idea of a systemic crisis is gone. A banking crisis is not there. The Fed have previously said, Fed President, New York President John Williams has said that financial stability should not be addressed through monetary policy. And that is exactly what the Fed has done here. They've used other tools to address financial stability. They have solved the financial stability problem. Now they need to return to the inflation problem. I think 25 basis points is the expectation for March. Remember, only a week ago, we were not thinking 50 basis points. But I do think that 50 basis points would be more likely than zero. I think a pause now would be completely irrational. It would be inconsistent and it would contradict what the Fed has said before, and inflation doesn't justify it. So overall, I think the move in two-year yields is wrong. I think ultimately it'll go higher over the weeks ahead, and that'll make it a more difficult backdrop for equities. And a final point, the Fed are saying we're going to avoid systemic risk, no panic mongering about the market, but they're not worried about assets falling in value, investors getting hurt.
Okay, so in Valerie's language then, the tightening of lending conditions might happen, but the Fed might still hike. Inflation still very much in focus. If that is the case then, Mark, are we at risk of being premature with this stock rally? I noticed FTSE 100 futures actually ticking into the red, but US futures pointing much higher. The dollar selling off in this really risk-on tone. Is that overdone?
It's going to be, okay. It's a hard to say the time span. I think the longer-term backdrop is going to get more difficult for US stocks. I think US stocks are going to take out last year's low. They are still expensive, and the backdrop's going to get harder in terms of both growth and yields. However, in the short term, the big news flow is the fact that the Fed has made an incredibly aggressive and quick-paced and smart plan to address systemic risk to the financial markets. And that is very positive for stocks. And on top of that, we got basically a Goldilocks set of data on employment on Friday. So the short-term news flow, despite the SVB situation, is actually very positive for stocks. The longer-term situation is bad, and the SVB bank plays into that because it will affect the entrepreneurial sector in the US. So longer-term backdrop bad. Short-term, I don't think this rally is wrong in any way.
Okay, Mark, thank you very much. And of course, talking about the entrepreneurial sector, a few UK entrepreneurial names, Moonpig, Future PLC, talking about having no material exposure to SVB UK, clearly something that they spent a lot of the weekend thinking about. So we're hearing from a number of UK corporates this hour. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team, MLIV Go, on the Bloomberg terminal. They've been all over and will continue to be all over this story.